Landlords is delighted to welcome a new sponsor of our mortgages and finance tribe, one of our biggest categories. So it's not only a new sponsor, but also a new lender on the block, and that is Quantum Mortgages. And I'm delighted to be joined by Jason Neal, who is the MD and founder of Quantum, and also Spencer Gale, who is Sales and Marketing Director. So welcome, gentlemen. Great to have you on board with Property Tribes. I said you're a new lender, and it's always so exciting when new lenders come into the space. Tell us a little bit about the backstory of Quantum, Jason. Why did you decide to form your own lender? Because the whole team have a very long-standing pedigree within the lending sector, don't you?
Absolutely. Well, firstly, Vanessa, thanks for having us. We're absolutely delighted to be working with Property Tribes. As you say, yes, we are a new buy-to-let lender. So we're here to provide full-term loans of up to 40 years to professional landlords. Although we are a new lender, as you can tell by our age, we are not new kids on the block. So most of our team have up to 20 years experience within the specialist lending sector, predominantly working for employers, a mixture between other specialist lenders and banks. So we've been in this sector for a long time, but only I'd say probably the last few years we've become increasingly frustrated about some of the challenges we face when we try to help landlords. We're very much a bunch of common sense type people, and the way mortgage lending has gone over the last few years didn't really sit too comfortably with us, because it was more about credit scoring and scorecards, automated decisionings, and we was having to say no to an awful lot of potential loans that made absolute sense to us. So we all become fairly frustrated. There was loans that could have been made that we absolutely believed in. We know professional landlords know what they're doing. So to be blunt, we got fed up with the type of lending that's been happening lately. So one crazy day, Spencer and I just sat down and said, do you know what, let's go and do it ourselves. It sounded easy at the time, but obviously it's not easy to bring a new lender to market. But actually what it's allowed us to do is to do the type of lending that we've always wanted to do in the past, that just makes common sense. So we've set up a lender that's based around common sense lending. We're not interested in credit scorecards, we're not interested in computers making decisions. We actually want to bring a proposition to market that helps landlords do the really important things for them, which is basically increase their profit, reduce their costs, become more tax efficient. So we put together a proposition that helps landlords achieve exactly that.
Well, fantastic. I guess, Spencer, really what I'm taking away from that is, as per the banner on Property Tribes, it's not a case of the computer says no, which is so frustrating for landlords, because everybody has such different circumstances. And there could be one tiny thing that puts another lender off, that if they had a proper bespoke underwrite, you could see past that and say, oh, actually, I can understand how that's happened. So it sounds to me that Quantum very much want to give more bespoke underwriting, get to know clients a lot better, and presumably, stay working together in a partnership for a long time and really help landlords grow and scale up.
Absolutely. And you see a lot of the time, particularly in social media, a lot of lenders are, they're promoting the fact they've got this 30-second offer coming. Well, that's absolutely great for bespoke high street cases that don't touch the sites. But as you said, one case compared to the next, there's so many different ramifications and changes between one landlord's requirements versus the next. If you have that credit scoring system, which we've been involved in with banks and other lenders we've worked for, it just removes the ability to be able to have that common sense approach. And we believe we put an offer together for experienced professional landlords that's going to enable them to be able to leverage the most amount of their property portfolio, but also to add to it properties they probably thought that they couldn't do in the past.
Well, you mentioned their experienced landlords. Are you interested to hear from newcomer landlords, or is your main client profile a portfolio landlord?
When we first approached the investor marketplace to fund this business, it's based on the historical business that Jason and I both worked in, which was Axis Bank. And One of the challenges we all had was the first-time landlord, first-time buyer marketplace, which we all know is really big. When you even think about it now, you think the average price now for a property is £271,613, which came out yesterday. If you're a first-time landlord, if you're a first-time buyer in the residential space, you might be lucky to get a 95% loan-to-value mortgage. You're still picking up a bill of £13,500 for a deposit. If you're a first-time landlord, that now increases to £67,900 as a 75% loan-to-value mortgage. So it becomes really challenging from a first-time buyer perspective, but our whole product matrix is made up for the experienced professional ones. So our starting criteria is one buy-to-let for 1 year. We can then be a little bit racy on the property by looking at the experience of the landlord, and then that goes out to, on our specialist range, that goes out to 2 buy-to-lets for 2 years, because, as Jason said earlier, we know that landlords will know what they're doing. But what they don't have the ability to do sometimes is put on the quirky properties, like a flat above a fish and chip shop, where they know it's in a decent area, they know that it could be tenanted, and they know they're going to get a good yield. So who are we to say that property isn't suitable for their portfolio, and why wouldn't we lend on it? Bearing in mind we're reliant on them as a business person to actually go out and source those type of properties. So that makes us slightly different to the rest of the marketplace, where we're driven more by the experience of the landlord and the property, rather than chasing a rate and a credit scoring solution.
Okay, yes, that makes sense. Jason, you've come into the marketplace at a really almost uncharted waters kind of time. We're in this highly inflationary environment, and now is not for landlords to be sitting there doing nothing. You know, we've had a lot of commentary on property tribes about you know, thinking about you need to get off SVRs if you're on them. What sort of I see you've got some 5-year, some 7-year fixed rates. What kind of product profiles have you kind of launched with?
Yeah, so in terms of our proposition, you know, as with most lenders, you know, we have a combination of fixed rate mortgages and tracker products, which are variable rates. I mean, it's incredible the change that's happened probably in the last 7 or 8 months. You know, when we started putting this property range together, swap rate, which is effectively what determines the price of lenders' fixed rate mortgages, was in the region of 0.5%. Here we are, you know, less than a year later, those same swap rates around about 3%. And it's basically, you know, the swap rate that determines the cost of fixed rate mortgages. So there's been a huge increase in the cost of funding of fixed rate mortgages. So of course, you know, that's made mortgages more expensive for professional landlords. And of course, this is all off the back of increasing Bank of England base rate, you know, with more increases expected. So, you know, it's a challenging time for landlords. So, you know, those that are looking to refinance now are going to find the cost of their mortgages more expensive. So therefore, it's more important for them now to actually look at the yields on their properties, you know, and their rental costs. You know, and this is one of the reasons why we were very keen to launch with the type of properties that have higher yields. So, you know, the single unit type properties, you know, are great. They're your bread and butter with most lenders. But as Spencer said, you know, we want to help with the high yielding properties such as, you know, HMOs, multi-units, semi-commercial units, flats in central city locations, which normally lenders won't lend on. So, for example, a lot of lenders have a limit on the size of a flat that they will lend on. You know, to me, that just doesn't make any sense. You know, you can have a 30 square meter flat, but you can't have a 25 meter square flat. You know, it seems crazy to me. So a lot of our landlords now are going for these slightly higher yield properties. Previously, they just couldn't get a mortgage on these properties, but now with Quantum, they can. So essentially what that does is their income coverage ratio is higher on this type of property. So I'd like to think they can absorb the higher pricing a little bit better than what you would if you just had your single unit bulk standard properties. So the cost of funding is going up, absolutely. Have we reached the peak yet? Not yet. So we're going to have an awful lot of landlords falling off fixed rate mortgages over the next few years. Because if you remember, the PRA and the taxation changes were about 5 years ago. Yeah. So, you know, the taking a mortgage 5 years ago, most people went on a 5-year fixed rate because of the ICR coverage. So as you said, over the course of the next few years, we're going to have an awful lot of people falling off their fixed rate, going onto a standard variable rate, which is probably a Bank of England tracker. So, you know, that's going to be going up some more yet. So, you know, what we've tried to do is have a fixed rate option, absolutely, because landlords want the security of knowing what they're going to be paying for the next few years. So, you know, we have a 5-year fixed rate and a 7-year fixed rate as well to give you long-term stability. But actually, right now, as crazy as it sounds, some tracker rates actually make sense. So, for example, we have a discount tracker that has an initial pay rate of 3.99%. If you compare that to where 5-year fixed rates are going in the specialist space, you're going to be talking about 5.5% very soon. Most lenders will be 5.5% on a 5-year fixed. So that 1.5% differential is quite a difference in cost. But most people say, well, it's a tracker, the rates are going to go up. So actually, when you compare the difference, you know, will base rates go up by another 1.5%? They have to go up by 1.5%, you know, just to be even. And obviously, if rates do go up by another 1.5%, they don't go up to 1.5% overnight. So, you know, they gradually creep up. So actually, it's probably even worth looking at, say, a 2-year tracker now, because the differential in pay rate between a tracker and a fixed rate is so large. Rates going to have to go up considerably to make you worse off. So, you know, we try to give the landlord as many options as you want. We are an intermediary only lender, so obviously the landlords do get proper qualified advice. So Property Tribes Financial Services will be able to sit down with each landlord, have a look at their individual circumstances, do the calculations on both product type, you know, and come up with a solution that's what's going to be best for you. But it is challenging times in the buy-to-let sector right now. The cost of funding is way higher than what it has been. We've seen lenders put in their fixed rates at little or, you know, very, very short notice. So, you know, it's a challenging time to launch a lender, but we take comfort in the fact that we know what we're doing. You know, the last time we had a rising rate environment was over 15 years ago. And as I said earlier, Spence and I was there. So, you know, we've been in a rising rate environment before. We know how to manage it. We know how to cope. But of course, if you've only been in the lending sector for 15 years or less, you don't know what happens in a rising rate environment. It's a challenge. So what we do is when we have to change our pricing, we do it in the right way. We give everyone advance notice and say, look, rates are going to have to go up. Give you 2 or 3 days to get the application in, and, you know, and we run it. And we run the process properly. So challenging times, but, you know, if your landlords work with experienced people who know what they're doing, they can certainly ride the storm.
Well, those are some really great insights there. Thank you, Jason. And I think that feeds very nicely into this reason that you've come on board with Property Tribes, because you want to be part of the landlord information streams. You want to help educate landlords and help them navigate their way through these very challenging times. And Spencer, I think, you know, it's really interesting to hear these kind of insights, because a lot of landlords just will always reach for the cheapest rate. And we try and caution them about that on Property Tribes, because there are many other different things that they should look at, such as the arrangement fee, and, you know, the reversion rates and all that other good stuff. And I think, you know, to jump for just automatically the cheapest rate can often not be the most prudent decision for a landlord. So I think it's great that we're having conversations like this. Absolutely.
And one of the key things, obviously, with the Property Tribes Financial Services arm, you've got probably more experience in there than both Jason and I as well, in terms of being able to give that advice. But just to follow on what Jason said, the 2-year discounted track that we offer, if you put that all into the machine, it's only got a 2-year ERC on it, and that 2-year ERC is only 2%. So you sign up for a 5-year fixed rate, your 1 year is going to be 5%, your 2 years is going to be 4%, and the 2-year tracker rates won't get up to the fixed rate already. So bringing that product into the marketplace, best part of about 6 weeks ago, has actually really come into its firm forth now as rates are going up and swap rates are going up. So I urge anyone who is currently looking to come out of their SVRs at the moment to speak to the guys at Property Tribes Finance to get the best advice they can And that 2-year discounted tracker could be a really viable option for them, which gives them the flexibility of only a 2-year tie-in. The ERC is less than a 5-year fixed anyway, and rates won't reach that with the Bank of England base rates over that time period, in my opinion.
No, excellent stuff. Well, yes, we just want to reiterate again that Quantum is an intermediary only lender, which means that if you want to access their products, you can do so through our in-house broker, which is Property Tribes Financial Services, and the broker team there are award-winning. They've known the guys at Quantum for years, and they're already introducing landlords and indeed entire portfolios to Quantum to find solutions for their financing needs. So the PTFS team are on hand to help you navigate your way around the Quantum products, and you can click on the mortgages tab at the top of the page for some further information about Quantum. I think I've read somewhere, guys, that this year is going to be the year of remortgaging. I think that's going to be a lot where the business lies this year because of the reasons that we've said. So it's great to hear about those possibilities. Just one thing anecdotally that we've been hearing on Property Tribes, which I just wanted to ask you because you're at the coalface. There has been some talk of lenders or valuers down valuing because they're very worried about, economic downturn on the horizon. How are you finding valuations to be standing up at the moment? Are you noticing any down valuations?
Very, very good question. So firstly, we would never tell a valuation firm what to do with a valuation.
Well, that's what I thought. I didn't think lenders did. I don't even know if RICS sends out directives or not, but I doubt it.
No, I can't speak for any other lender, but we would never ever do that. So surveyors are professional individuals, and we instruct them to carry out a valuation report on our behalf, and part of that is obviously an open market valuation and a valuation on the rental income. Now, some lenders actually have different guidance notes for their surveyors. So, we are quite explicit when we say give us an open market value. Some lenders might actually say we want a valuation based on a 60-day sale, for example, based on a quick sale. So obviously that's going to result in a down valuation compared to an open market valuation. So, the way the lenders instruct the surveyors are slightly different. To be honest with you, if we instructed our surveyors to down value, they'd probably have a dim view of that anyway. So no, the lenders certainly don't do that. However, in the current climate, there's no doubt valuers will be a bit more cautious in their valuations. And ultimately, what they're looking to do is to get comparables. So, whereby sometimes valuers struggle is if they can't find comparable sales of a similar type property in that recent area. So, that accounts for an awful lot of down valuations. But it's also down to the experience of the valuer as well. So, we've already said that the type of properties that we do are somewhat different to most other of the vanilla type lenders. So, a lot of valuation firms, if you were to send them round to a small studio flat that's only 25 square meters and it's above or adjacent to a commercial unit, the vast majority of valuers will actually say it's not mortgageable and it has no value, which is no help to anybody. But actually, we work with more specialist surveying firms, and actually we give them instructions to say, well, actually, as far as we're concerned, it is saleable and it is mortgageable because we're prepared to do a mortgage on it. So it's about working with the right valuation firm for you as a lender. But there's absolutely no doubt that some surveying firms will be a lot more cautious than others. But I still generally believe that they don't work to instructions. They are independent professionals. Sometimes they just struggle to get comparable evidence because that's what they have to do. It's one thing to go away and say, actually, this property is worth X amount of pounds. What they have to do for their lending partners is actually provide comparable evidence as the reason why it's valued for that. And that's normally where the valuations fall down. But to answer your question, I'm certainly not aware of any instructions to down value properties. Spencer,
a lot of lenders, in fact, almost all of them now, once there's been a down valuation, they won't accept an appeal. Is Quantum the same in that respect?
I think that when you go down that particular, we're happy to put an appeal in if we believe it's justifiable.
Yeah.
We're not going to put an appeal in just because the broker says, oh, it's been reduced, so go and appeal it. Again, as Jason said, is that they're professional people. They are there to protect their business. They're there to protect the lender. There are eyes and ears on the ground, and they have a skill set that we don't have, which is part and parcel of the whole supply chain. And they're a really important part of that supply chain. So you have to take them sometimes on face value, is that they know what they're doing. We lend a mortgage. They provide a valuation for that mortgage. And as you said, they're all RICS qualified. If something looks out, absolutely, we will go back and check it. And we've already had conversations with our specialist valuer, and they're very open to conversations. They're very forthcoming. It is a partnership. Some of the bigger ones, it's not so much. It's like, no, you can't do that. But our specialist range, with all the different properties that Jason mentioned earlier, is 72% of our business. So without that relationship between the two of us and have the ability to go both ways, it will be very difficult not to build that relationship up together. So yes, we can appeal. Will it ever get overturned? I don't know. It depends on the circumstances. It depends on where the property is. It depends on their comparables. Sometimes the comparables don't compare. And you think, well, where did they get that information from? So on a case-by-case basis, you have to take it that they have the skill set, they have the experience, they're being paid for that service that they're providing to the lender in the first place. But do we have the ability to appeal? Yes. Will it get overturned? Highly unlikely, unless you can provide your own evidence that the comparables that they have chosen are inaccurate.
Okay, well, this is all good stuff to know, getting to know quantum here. As we kind of close this out now, guys, one thing that I've always loved about property, and I've been a landlord since 1992, is that even in times where there's lots of dark clouds, you can always find a silver lining. And I think the informed, educated landlord is the landlord that's going to thrive and prosper through these challenging market conditions. But I just wondered if either of you had any view on where opportunity lies. Do you have any other kind of favourite strategies in the current market conditions? Bog standard buy-to-let. You can't go wrong with that.
I think it's one of the key factors. One of the products that we haven't really talked about yet is EPC ratings and green mortgages out there. It's a topic that's not going away. 2025 and 2028 is not very far away. I suspect the white paper will push those dates out because they're not conducive from a timescale perspective. But some of the research that's coming out is 27% of landlords don't actually currently know the rating of their property.
Yeah,
which
scary.
is very, very scary. And you look at the stats in terms of London and Bath, the Victorian properties out there, of which their ratings are below D and E. I would take the opportunity at this particular moment in time, whilst you're remortgaging, to leverage as much as you possibly can out of every opportunity to be able to ensure that you can get as much capital out of your business. We have an excellent green mortgage product where if you decide on a remortgage that your property is not suitable for EPC ratings, we have a 2% green LTV boost that will enable you to raise finance over and above the 80% that we go up to enable you to actually go and change your EPC rating within that particular property. And I think from our perspective, whilst the landlords out there who don't do that are going to get a very, very hefty bill very quickly, and that time's going to come up very, very fast. We don't really know what that looks like. But from my view is that it's an opportunity now to get as much out as you can out of your portfolio, to be able to look at the high yielding properties that we will do, those flats above the shops, the flats above alcohol and food, which will give you the yields, and then just be able to raise those deposits by taking as much money out of your portfolio at the moment, but then looking at beyond tomorrow and looking at the future, and EPC is not going away.
Well, that's really excellent advice, Spencer, and I think you're absolutely right. If you are going to refinance, do it all in one big hit kind of thing, because every time you do refinance it costs you. So it's better to go big and take as much as you can than to kind of do it piecemeal. So I think that's really good advice, particularly in the current market conditions. Any final words from you, Jason?
Yeah, just to stay on the opportunities fee. So there's always going to be opportunities for, for landlords out there. The private rental sector, is now larger than the public rental sector. So, it's a huge part of our housing stock, probably 20% now. So there's always going to be a huge demand for rental properties, especially, we live on a small island, and we're not growing land anymore. So, in terms of the population growth, there's always going to be the demand for good quality rental properties. Especially when you look at, the average deposit when you want to buy your property now, it's somewhere in the region of, 30 to 50,000 pounds, which, is just unachievable for, most first time buyers. So there's always going to be an opportunity for good quality rental properties. I stress the word good quality because, the days of not so good quality housing, it's just not going to rent anymore. But good quality housing, it's there. I think permitted development will continue to provide a huge opportunity for landlords moving forward. We've already seen a sharp increase in commercial to residential developments. I think, those type of properties there are relatively cheap to pick up in terms of the scale of the property. Once you've done the conversion work, they're readily mortgageable now, and the rental yields from what we've seen are exceptional. And the growth in HMOs and multi-unit properties is only gonna grow. So we've seen the shift from the type of the single unit properties to the HMOs, multi-units, and we continue to see that evolve into commercial to residential development. And recently we found a huge opportunity in Northern Ireland, for example. I don't know if you've got many landlords in Northern Ireland, but literally, we only launched 3 months ago, and we do lend in Northern Ireland, one of the few lenders out there. And we recently found out there's only 2 banks in Northern Ireland that would lend to an SPV, buying a property in SPV in Northern Ireland. Now, I'm sure the vast majority of your landlords are buying in SPVs now or refinance into SPVs. So there's certainly a huge growth sector there. But, I'm absolutely confident that opportunities will continue to arise for, good quality professional landlords. And, this is just a cycle. We go through cycles, and, we know that professional landlords are probably one of the most robust types of asset classes out there. So I've got absolutely no doubt that professional landlords will continue not only to see through this difficult time, but actually strive going forward.
Indeed. Well, I'm glad you mentioned quality, because I think quality is all about future-proofing your property business. We're in this for the long term, and I think it makes sense to have good quality properties that can weather the storm and meet the market demand. So we've got rents going up, we've got massive tenant demand. So there are actually some very, very positive things for landlords to think about going forwards. But thank you both, gentlemen, for joining me on this call today. As I said, delighted to have you on board with Property Tribes. Quantum mortgages can be accessed via Property Tribes financial services, and hopefully we can make this a fairly regular occurrence where we can hook up on Zoom and we can chew the cud around the property market and share some insights from Quantum, how things are going for you, where you're seeing the opportunities, etc. Because I think you've got so much combined knowledge to share with the Property Tribes community, and we're just so great to have you as part of the educational information streams.
Look forward to it.
Thank you, guys. Thank you. See you next time.
Take care. Thanks. Bye.